Welcome back to the Digital Capitalist Podcast. Today we are taking a deep dive into what is arguably the most critical, highly debated, and frequently misunderstood topic in Web3 right now: privacy. For years, the crypto narrative was dominated by radical transparency, the idea that every transaction, every wallet, and every smart contract should live on a public ledger for the world to see. But as the ecosystem matures, the glass house design is hitting a wall. Joining me today to unpack this is Ben Schiller. Ben has had a front row seat to the evolution of this industry for over a decade. He spent 6 years as managing editor at CoinDesk, reported for Fast Company, and is now head of communications at Miden. Miden is a zero knowledge, aka ZK, roller platform dedicated to scalable private smart contracts. Ben, welcome to the show.
Thanks very much for having me, François.
It's my pleasure. Ben, before we jump into zero knowledge proofs, you made a fascinating transition from veteran crypto journalist to working directly inside a zero knowledge project. How did that shift influence your perspective on where the industry is heading?
Yeah, that's a great question. I was a journalist for about 20 years, including, as you say, at CoinDesk, and I joined Miden last August. And yeah, it's definitely a different type of job, and I think also a different type of industry these days as well at the same time. So, I mean, as a journalist, you're very much like an outside observer. You're taking a kind of relatively neutral perspective on the industry, whereas working for a startup, obviously you have a particular angle to promote and a particular product to promote, definitely in our case. So I guess you're less objective as a practitioner than you are as a journalist. And as I think we're going to come on to, the industry's changed since the time I was a journalist as well. So that's probably a different context to the job as well.
Absolutely. Well, let's start with the fundamental problem. Why is total transparency in crypto actually a bug rather than a feature for mainstream adoption going forward?
Yes, that's a great question, and really comes to, I think, a fundamental sort of problem that the industry needs to solve. As you say, like the blockchains that got this industry started, Bitcoin, Ethereum, were built in this kind of fundamentally transparent way. You referred to the greenhouse, and it was very much like the community was policing the network, and that was the idea of having this radical transparency. But as time has gone on, we've realized that this radical transparency isn't something that business users want, that corporations want, that financial companies want. They need to balance transparency with privacy, and then they need to balance privacy with compliance. So that's kind of another trade-off, obviously, around privacy, is like, how do you have people have private transactions on a network but ensure that it's not being used for some nefarious purpose like money laundering, for instance. So that's another trade-off that you have to deal with.
Right, and beyond just consumer awkwardness, where we don't really know where it stands yet, we're trying to figure this out. There is an economic cost to transparency that many people overlook. So, tell me more about that.
Yeah, I mean, I think a lot of things about blockchains, at least the early blockchains, were probably designed in a way that you would think was suboptimal in terms of just pure economics, right? So validating a whole system with lots of nodes and users, having this transparency idea as a way to keep the network honest. I mean, it's great from many points of view, but probably from an efficiency point of view, it's not that efficient. So the question now is, how do we have the benefits of a blockchain in being this permissionless system, an open network for trading, but also have something that is more private and that is more compliant for recognizing the need for regulators and other external observers to be able to view into the network, to see those parts of the network that they need to see to validate, to make sure that it's operating as it should. So it's a series of trade-offs that we need to manage all the time.
Right. So let's pivot to the retail perspective specifically. For the average crypto user dealing with private keys and zero knowledge tools has traditionally felt like rocket science for most people. Like, what does that mean? I don't even know what ZK means, or even private keys. For the regular investor, it's kind of alien language. How does the future of privacy change for retail investors over the next few years, in your opinion?
Yeah, I mean, I would definitely say like a lot of new technology in crypto and other fields. ZK, zero knowledge, is relatively new. It's been around for a long time, but it hasn't until very recently reached that point of corporate adoption or retail adoption. In very simple terms, a zero knowledge proof system allows you to prove something between two parties without either party revealing everything about the transaction. And the analogy that's often used for a zero knowledge proof is like if you're going into a bar and you need to prove that you're 21 years old. Today, you have to show your ID card, and it shows all of your information on it. It shows the color of your eyes and the type of hair you have and where you live and various other bits of information, a lot of other information that kind of gets beyond that. The only question that matters in that situation, which is to prove that you're one day older than 21. So that's what a zero knowledge proof is, if you like. It's just proving that you're 21 rather than showing that you have brown hair and blue eyes as well at the same time. And if you think about the internet, a lot of how we proved identity and attested to transactions has been that kind of maximalist kind of information discovery, right? You've had to show everything about yourself in order to prove that one thing that matters. That you're, for instance, that you're not on a sanctions list, for instance. That would really be the only thing that would stop you from doing a transaction on a blockchain. And that's probably the only thing you need to check in order to validate that transaction. So that's kind of what we're trying to do with this zero knowledge proof system that we're generating, which is to have transactions that are attested just on the information that needs to be attested to, rather than everything about the people that are transacting those transactions.
Right, that's fascinating because there is literally countless applications for that. If you think about voting or ownership, single title ownership with NFTs, they can be transferred on a ZK base as well. I mean, there is for collectibles or art or anything that you own, you can try and sell something from your phone and show them that you prove that you actually own it. There is so many great things about this where the founding fathers were protecting property and privacy rights, and so that's been violated over and over again over the last decades. And so we're trying to reestablish privacy and, in some way, property rights as well, because they're linked with that technology, which I think is absolutely fantastic and very American as well. And I hope we can, implement that across the board in seamless ways in all different industries. Um, and also, I mean, think about medical records and so on and so forth. There is so much to imagine there.
Yeah,
So what
absolutely.
about?
Just
Go ahead. Go ahead.
touching on that. We're talking today and at Miden generally about a rather particular type of privacy, right? So it's about fixing a problem with a blockchain where it's now a public ledger and transparent to everybody. And in order to encourage adoption, allowing privacy for users. But obviously, there's a much wider conversation around privacy, which I also touch on in the privacy podcast, which is a podcast that we have around, just the simple privacy of the internet in general. I think you can make this wider argument that the internet, since its earliest days, was never designed around privacy, around the integrity of people's identity. And that's a bigger problem that definitely needs to be addressed. And we have rather cumbersome, onerous kind of ways to check people's identity and attest to their rightfulness today. And you could think of lots of ways in which that's true. And we can talk about that if you're interested as well.
Sure. I mean, what would be interesting to explore is about the user experience. Historically, using privacy tools meant dealing with clunky mixing pools and waiting 10 minutes for complex circuits to generate proofs. Like the speed of execution has always been kind of a problem, and the platforms to use were quite out of the blue. You know, people were not really familiar with them. So that brings us to Wall Street. Uh, how do you embed that into Wall Street? We have seen massive institutional momentum with Bitcoin, Ethereum, and ETFs. You know, like record-breaking ETFs. The Bitcoin ETF for BlackRock is their most profitable product. Asset tokenization, stable coins, but traditional financial institutions have been hesitant to bring their core operations on chain. So what's holding them back? And at the same time, they are very innovative on the privacy piece, just like you do at Miden. And you know, if you look at what's happening with the New York Stock Exchange and the Nasdaq, can you tell me more about the user experience for retail, but then also the kind of paradoxical behavior of like traditional finance wanting to hold back tokenizing everything or getting on chain, even though it's happening, but at the same time taking steps in ways that are probably benefiting them as well and trying to keep control of certain things.
Right. Well, just on the kind of UX question, I mean, it's very much like, I mean, our technology is quite on the cutting edge. It's quite complex, but in terms of the UX, the front end experience, we're very much in the business of making it simple for people. And I totally agree with you. Like lots of aspects of crypto in the old days, when the technology first comes out, it tends to be for hobbyists, for people who really understand the tech, and they're really the only ones that can cope with the complexity of it. So, but you know, we're very much as I say, in the business of reducing the complexity. So, for instance, we're working with a protocol called Epoch, which has an intents based infrastructure. So, you know what an intent is. It's about communicating the intent of the user to use a system and abstracting away the complexity in using it, rather than having to have them understand every chain, every bridge, every kind of part of the transaction. So when people use Miden, we hope that, you know, for instance, when you're using the wallet, it's a 2 or 3 step process, like it would be if you're using an Amazon, you know, e-commerce platform, that sort of experience, like 1 or 2 clicks. And it doesn't require you to have a PhD in cryptography or in ZK technology in order to use it. So hopefully the technology is complex, but the user experience is simple enough. I mean, in terms of Wall Street adoption, yeah, I mean, I think there's been a huge kind of interest in privacy technology in the last couple of years, primarily because of institutional interest in having private versions of public blockchains. And obviously, you know, there's been a long history of the cypherpunk version of privacy to, you know, which is one of the main, you know, when Bitcoin was first invented, it was very much seen as like a privacy product. But, you know, we talked about the problems with having public networks. So, you know, the Wall Street user very much wants the benefits of a public network, but the privacy to use it. So that's what we're trying to develop for our institutional users and for retail users as well.
So my understanding as well on the Wall Street kind of pushback to get on chain and trying to be cautious there is because they are concerned about alpha leakage and compliance. What's your take on that?
Well, absolutely, yeah. I mean, I think institutions have always been concerned about privacy, right? You know, there's confidentiality requirements. There's also, you know, trade secrets. If you're trading a position, you don't want your competitors to know what your position is. So, I mean, if you just look at stablecoins, for instance, you know, asking a company to put its business on a public stablecoin network, I mean, who is going to do that? So, you know, there are obvious reasons why, you know, a company would want to use a stablecoin, but they're not going to do it on a public system. So, you know, that's definitely one area that we're developing is a private stablecoin. So you can have the functionality of stablecoins, but to do it in a private fashion. So what was the question again?
No, that I was not. It was not a question. It was a comment about how how Wall Street is trying to preserve their their secrets, like you were saying, and their trade secrets, and also like like privacy of the customers, which makes sense, and how ZK is going to be very important for that as Wall Street moves on chain.
Yeah.
So how do zero knowledge architectures bridge this gap? I know we're talking about Wall Street's need for secrecy and regulators demand for compliance. Like I think the opportunity is there. Like how do you move on chain? And I think the most complicated thing is not really the privacy piece, which they'll figure out, but the compliance piece. Like what do you hear in your job and when you talk to your clients or your prospects about the compliance piece? Because everything that's like tax reporting and
Yeah.
of course, and the auditing and all these things like that is a long shot.
Absolutely. And this has obviously been the big blocker for privacy tech since the beginning of blockchain, is that, as soon as regulators, or some regulators at least, hear the word privacy, they think secrecy, they think bad things. They have this attitude that, the only reason people want to keep something private is because they have something to hide, which is kind of if you think about it, kind of a strange attitude, but it's undeniable, and it's definitely a prevalent attitude. So, a lot of what we're trying to do and what institutions are trying to do when they're adopting privacy technology is to make the case that privacy and compliance don't have to be in conflict with one another. They can exist simultaneously, and that's very much what we're doing with Miden. So, when you make a transaction on the Miden network, you can do it privately, but there's also an audit trail there that ensures that you can prove to whoever needs to know that you've transacted with somebody that you trust, somebody that's been screened for say, sanctions problems, that they're not on some sanctions blacklist. We work with a partner named Predicate, which is basically providing screening services for privacy applications. So when you need to prove that somebody isn't, for instance, on a regulatory blacklist, you can screen that transaction first. Or if you need to create a audit trail that can be checked out by an internal compliance person or an external compliance representative, that you can keep that record there. But the important thing is that you're keeping a record that only squares with the needs of the regulator or the needs of that internal compliance person. You're not collecting everything or in this kind of dragnet sweep in a way that privacy is done today. That we're collecting all in order to prove one small part of the information flow, and that's the crucial difference, I think.
That's fascinating. I mean, that completely shifts the dynamic from crypto versus regulators, right? Which was the original kind of like narrative of the cypherpunks,
Right.
to crypto providing better compliance tools than traditional systems, isn't it?
Right. Exactly. And I think, in the past, the regulators, I'm talking the SEC or the CFTC or, OFAC, these bodies were, I think it's fair to say, naturally suspicious of privacy tech. And we see a number of kind of manifestations of that in the last administration, in the way that which they went after various privacy protecting technologies. But I think if you look at the new SEC, and particularly somebody like Commissioner Hester Peirce, she is very open to privacy technology, solving this problem of how do you have privacy on the one hand? Well, sorry, there's some noise outside. I'm sorry.
New York. Okay.
Hester is otherwise known as Crypto Mom, a great champion of crypto here in the United States. She is very open to privacy technology as a way of, as I say, squaring this balance between privacy and compliance on the other hand. So I think that's an interesting question. And as I said, that's kind of a much wider kind of argument around the future of how do we prove identity online generally. And if you look at something like the Bank Secrecy Act, which goes right back to the 1970s, the early 1970s. That created like a huge kind of dragnet for collecting financial information in the financial economy, and huge compliance cost on financial institutions to basically be the eyes and ears of regulators and law enforcement. So I think changing some of that calculus in the future with technology, where we're only collecting information that we need to collect rather than everything in order to collect that small amount. So I think PEST, for instance, is open to changing that paradigm down the line. And I think that's kind of an interesting, bigger question for privacy going forward, not only to do privacy on chain and those particular transactions, but really to actually change the whole paradigm of how we're collecting information and ensuring both privacy and compliance in the wider financial system.
Yeah, I mean, it's a revolution, I think, that you guys are undertaking, and it's really fascinating because when you look at, it's so important to have privacy, and like there is essentially no more privacy online anymore. Like, everybody is like stealing everybody's information, the data brokers and all these things that you need to be able to reclaim, all these things. And when you see how much public records are out there of like people's addresses and where they live, and like finding phone numbers and all those things. I mean, that should not be something that is doable. Or if that was doable, then we should get paid and agree for people to share your information and reclaim control of that. So that if you want them to share it and how many times it's shared, it costs them X amount of dollars every time it's shared, or something that actually like allows people to reclaim their privacy. That's such a big deal.
Well, 1,000. If I could just say one more thing about that. I mean, I think ultimately, privacy is really about not only what information we share, but really ultimately about choice. It's about empowering users to do what they want to do. So it's not just like me being able to do a transaction without revealing everything about myself. It's also about being able to make choices about what I say and don't say, and that we all do and don't say on the internet. And I think it's really ultimately about power, or about choice, and about giving that power back to users.
So Ben, I mean, as we look ahead over the next 3 to 5 years, where do you see the crypto privacy landscape settling? Do you have any kind of idea where it's going to be like in 3 to 5 years? Will private by default chains become the standard, do you think?
Absolutely. I mean, I think, Miden is a chain that's built for privacy from scratch, right? It's built on a ZK level, a layer. But, every chain out there, Ethereum, Solana, you name it, they are all developing privacy solutions bolted onto what they have. So privacy isn't just for the privacy industry or for ZK tech. I mean, every single chain out there. And if you look at major chains like Circle's Arc, for instance, or Tempo from Stripe and Paradigm, or Canton, these are all chains that are built with privacy in mind. And, privacy is the new required feature set for any blockchain out there. So I think if you're looking 3 to 5 years ahead, every single chain will have privacy on it. What I would say is that, and this one thing that Miden is keen to talk about is, I think there is a dividing line between bolting on privacy to a network and having privacy at a fundamental protocol level. And I think that's the difference between a product like Canton, which is more of a permissioned walled garden approach to privacy, whereas a project like Miden is more of an open, public, permissionless network where you have privacy, or the choice of privacy, at the transaction level or at the protocol level. So I think that's kind of a fundamental approach. And I think that's one thing to watch out for in the future, not whether we're going to have privacy or not, but how we achieve privacy. And that is an important distinction, because we know that networks which are controlled by their operators or controlled by their clients are less likely to ensure privacy in emergency situations or in moments of stress, or when different actors want to make changes to that protocol, we know that privacy or rights like that can be lost. And what we want to ensure is that when we say privacy is by default, we really mean it. And default means that privacy is baked into the protocol, like certain attributes of Bitcoin are baked into the protocol of Bitcoin. And that's why Bitcoin has remained Bitcoin all of these years, because it's not changeable by certain people trying to make changes for whatever interest or another. So I think it's the same with privacy. Is your privacy baked in to the protocol, into the very nature of the system, or is it something simply offered as a feature to people using that system? And I think that's a fundamental distinction.
So who are you particularly targeting at Miden? Are you doing both exchanges, Wall Street, traditional finance, banks? Like, what is your approach to the market?
Well, we very much believe that the future of the on-chain economy is very much built around the stablecoin stack. That is where the liquidity comes from. That is where the programmability of finance comes from. So I think that's where we're selling into. We're selling into what is broadly the stablecoin stack. So we're backed by A16Z, and they have a thesis that they put out with their last funding round 5, which is known as the stablecoin stack. So our version of that is what we call the PRIFI Stack, which is basically the stablecoin stack plus privacy. And how do you unlock not only the liquidity coming into that stablecoin stack, but those financial applications that are then built upon that new emerging stablecoin stack. So, for instance, that might be private wallets, it might be private treasury management, it might be private payroll, it might be compliance. The different financial applications that you can build upon this new stablecoin programmable money stack. And I think that's where we're focused, whether that's with fintechs or neobanks, or with funds or remittance providers. These are all new financial on-chain applications that are looking to add privacy and build upon this money that's coming into the Genius-enabled stablecoin world.
Well said.
Yep.
Ben, thank you so much for joining us and breaking down such a complex topic with such clarity. Where can listeners follow your work and learn more about Miden? I know you have a podcast. You want to talk about this a little bit?
Thank you so much. It was great being on the show, Francois. Thank you. Yeah, we have a weekly podcast called the Privacy Podcast, where we interview pioneers in privacy, and that's mostly builders and founders in on-chain privacy. But as I said, there's a kind of a wider topic here around privacy. So with other people on, they can check that out on Spotify or YouTube, and they can get to that from our Twitter account or our X account, Miden, OX Miden, or via our website, which is miden.xyz. And we are very open to anyone who want to come on the show. If you have questions, topics you want to explore, please get in touch with me, and we're very happy to have you.
Fantastic. And to our listeners, thank you for tuning into the Digital Capitalist podcast. If you enjoy these conversations, if you find value, which I think really Ben delivered today, make sure to hit subscribe, leave us a review, and we will see you next time. Thank you, Ben.
Thank you, François.